Okay, so we're recording now, and welcome everybody to the Stock and Option webinar. I'm Jared Johnson, your host this evening. Good to see you all. It's been a long, crazy week of trading. Markets are being silly a little bit. I'm trading a lot of different markets. I'm actually not trading too many options, too many stocks right now because, I don't know, to put it in kind of I don't know, realistic terms, the stock market sucks right now. So I'm just going to say that it's terrible, and there's nothing I want to trade. Well, there are some things I want to trade, and I'll tell you I'll tell you what they are. How's everybody feeling? What are you guys thinking of this market? Am I missing something? Is it just garbage out there, or is there something I'm not seeing? Are you guys finding things you're loving? Or are you just killing it on the trades? How's it going for all those watching stocks and options and so on? Are you just going strong? Because I would say that there's nothing I'm super excited about. That would probably be the easiest way to say it. Not super excited about too much, but that's for this moment. It sucks. Hey Martha, good to see you. Hey Waylon. Normal, nice to see you there. So it does. The market kind of just stinks right now, and there's just nothing too much to do. So good, normal. All right, doing some day trading on the Qs. I like it. I like it. You mentioned that you were doing that, and I think that that's the thing to do right now, right? For everybody is, if you're going to trade options, you pretty much have to either just day trade it, and there's movement on the day trading side of things, or you have to just stay out of it, really. And Patty, yep, I like that. Selling options is always a good thing. Covered calls. So anybody not familiar with covered calls, that's a great thing to do right now because nothing's moving too terribly much, and I just don't have so much confidence in the market that I would even feel like buying too many stocks yet to sell options on. But I think we're getting there. I think we're getting to a point where it might get interesting to start really buying into some stocks. But I don't feel like we're quite there yet. For those that are just buying stocks, for those that are buy and hold people, which is great, this is a good market for it. Buy anything right now, basically, and just hang on to it. But on the option side of things, yeah, I'm just feeling less excited about what we have going on in the stock market right this moment. So yes, it's all about either going pretty long term or going pretty short term, like weekly options, daily options, that kind of stuff. So that's all okay and good. Yeah, I think that's good. I like writing covered calls. I think that's a great way to go about it as well. So. And definitely, guys, anybody that owns stock right now, just sell options on that stock, make some money on it. Even if you got to put those calls that you're selling more in the money, or yeah, I mean in the money really, putting them closer to your current, to the current stock price, even if where you bought that stock is down a lot. Sell some short-term options and just keep a close eye on it. Make sure that they don't have a wild move higher and you got to close out. But yeah. So let's recap a little bit on the week. Who watched oil prices go to negative? Was that exciting for anybody? I guarantee that for everybody in this webinar right now, that was the first time you guys have seen that, mostly because it was the first time it's ever happened. So somebody told me it was the first time in their life that it happened. I said, well, it's the first time in the existence of ever that it happened. So it's the first time in everyone's life. Yeah, Dom, what a crazy situation that was. Does everybody kind of understand what happened there? Do you guys get what it meant that oil prices went negative, that they went below zero? Everyone kind of understand that whole process? I'll give you like a 1.5 minute explanation. Hey Scott, good to see you. Yeah, never seen it before, Steve. Yeah, it was certainly an absolute first time. No way around that. Um, and it was definitely quite quite strange. Um, so yes, I see a comment coming in on one of my chats here. So no place to store oil. That was kind of first and foremost of what happened. But remember, when we're looking at oil prices, so you can look at, if you type in CL1, that'll give you, the front contract, right? That'll give you that current, most current contract. I believe May's contract expired on Tuesday. Someone correct me if I'm wrong on that, but yeah, a lot of supply, no storage, all that stuff. So what was happening is we had a lot of oil. There's no demand. There's nowhere to put it. And so May's oil prices, we're looking at futures prices here. So one of the reasons we saw this big dip all the way down to negative $40, right? Oil got to negative, or May's futures prices got to negative 40, is because nobody was willing at all to take delivery. Therefore, the options were essentially worthless, and people started selling the heck out of them. And we saw May's oil prices just crater. Right now, that doesn't mean necessarily that okay, oil is now this price. Yes, the futures price for May got down to that. This is now June's prices, and when you type in oops, when you type in CL here and you go to crude oil futures, next contract, here's July. You can see July's prices are trading around $22 for oil. And if we go, good grief, keep going on here. If we go even further out, let's say we go to December of this year, oil prices are, crude is trading around 29.50-ish. So, so oil, so the spot market, that's kind of the tricky thing, right? What you can buy and sell oil for right now today, that definitely took a big hit. So, but oil prices are really a little more stable than it seems, right? And that's kind of the story. But yeah, nobody was able to take delivery. There's no pipelines to put your oil on. There's no more tankers to store oil in. Unless people were going, to wherever these production facilities are with, endless barrels of oil, there was just nowhere to put it, nothing to do. So we saw a first time ever kind of situation. So what does that lead us to? People have been asking me, is there good oil trades to take? Is there good oil stocks, some of these basic material stocks? Can we trade those? You can. I wouldn't feel super excited about getting crude oil related uh, uh, things yet. So obviously the big one is USO, right? USO is these guys are just pure oil, right? United States Oil Fund. And so is it a good time to buy into these guys? It might be. It might be. If you buy some shares of USO, it may be able to recover. And if you can pick these guys up at $2.64, as kind of their comfortable area where USO has been trading is around 10, kind of $10 to around $15. That whole region in there. Can we get back to that? I think it's possible for sure. I don't think oil is going to just become obsolete because we're far from that whole situation. We're just in a we're in a bit of a scenario where nobody's traveling, nobody's driving, nobody's doing anything. Demand is way low, supply is way high, and there's no storage. So it's a little bit of a problem. But that will go away. That'll go back to kind of normal. Not normal that oil's going to be $60 or $70 or $80. Maybe it will be. I don't know. Who knows? I don't have a crystal ball, and I don't really care if it gets back to that. But what we do care about here is, can we trade? Can we do something with what's happening right now? Right? Can we buy into some USO? Can we do some of that? So that's kind of the question. Mel, many years ago, I was near Chesapeake Bay. There were a bunch of tankers just parked in the bay. Um, Yeah, and I think that's kind of what's going on right now. I've seen headlines and articles and so on about these, these tankers that are just parked all over the place. I mean, like if you went swimming in the Strait of Hormuz or whatever it's called, you'd probably bump into a couple of tankers. It wouldn't be a pleasant experience. So, I think I think it's just being stored every which way, every possible place. It's just a mess. Um, and yeah, for sure, Mel. And that'll be an interesting thing, right? When the vaccine's announced for for coronavirus, or when people just say they don't care about it anymore, or whatever ends up happening there, we'll probably see some good activity there. So, what are some things you could do with USO, for example, right now? What does USO do? They basically just buy a bunch of futures contracts, and they go out and out, and so on. Um, so what could we do with USO? I mean, at this point, there's a couple of things you could do. Number one, you could buy shares of USO if you felt so inclined. Buy shares for 250, 260, and sell options on those. That would be something to do. Kind of offset any future lower prices that might happen. You could also sell naked puts on USO and get assigned, right? Make a little bit of money getting into USO. So sell the 250 put, sell the $2 put. If it goes down, you get exercised on the option. You own 100 shares or however many contracts you sold that you shorted, and that's a way to trade it. But I mean, I don't think it's a terrible idea to buy shares of USO right now. I think it could, on the longer term play, it could be good. I would not, by any stretch of the imagination, be trading. I wouldn't be buying call options. I wouldn't be putting any bullish option trades on yet. Certainly no naked options by any means. So yeah, I think buying some shares, selling some options on that's great. That could work. But we probably have a pretty slow period in oil coming. So, if we don't get the bottom of all of these stocks and of oil and everything else, that's okay. We don't have to get the bottom. We don't need that. We just want to get some good prices, some good low prices that we may not see for a long time to come. So, one thing that I would strongly encourage everybody to do is just be careful in this market. Don't worry about, I've said this last week and I probably said it the week before, because we're kind of in that same situation. It's not so super worth it to buy the bottom of all these things, or try to, because probably things will head lower than anybody thinks they will, and then that gets frustrating and so on. Let's get some bullish confirmation. Bullish confirmation's okay. Let's get some bearish channels that are breaking out. Let's get some double bottoms. Let's get something like that happening, right? And I give everybody in this webinar and everyone watching this recording and so on absolute positive permission to not trade at all, right? It's okay if you don't trade for the next week or 2 or 3 in the stock market. Totally okay. Super okay. If you have a good trade to take and you have a good situation like those that own stock and you're selling options on those stocks, great, awesome, do it. But if you just think to yourself, I don't know what's going on, I don't feel like I know what's going on, I don't feel comfortable about what's going on, that's okay. That's okay. I'm here to tell you that is okay. You can stay out of the market. It's no problem. But there will be some opportunities, and we'll talk about what those are and where I think some things might get a little interesting. But for the most part, it's a little bit of a tricky time, and that's okay. And year in and year out, there's going to be times in trading where it just doesn't make sense to do a lot, and we are certainly in that period right now. It does not make a sense. That doesn't make a lot of sense to do much. Lenny, there are tankers off the coast of California right now with no place to go. Yeah, that's craziness. I mean, I've never been on an oil tanker, but if there's like a 24-hour buffet and some lawn chairs, that might be okay. I could work with that. I could work with being stuck off the coast, but I have a feeling that might not be the case. I don't know if living quarters are so nice there. Steve, that's true. You can do a lot of practice. This is a great time, everybody, to practice and to learn and to just get a good feel for for all things option trading and stock trading. But yeah, there's some interesting things happening. Okay, let's talk a little bit about here are the trades that are blowing my mind right this moment. Let's just use the SPY for example. So SPY is at an interesting area that we're not super surprised to see. A lot of support over here, a lot of resistance over here. And then we've kind of got this little consolidation low right here. So we're kind of stuck, and let's just put it right at the high. What the heck? We're kind of stuck in this little area on SPY, which is about 271 to about 286, 287, just kind of in this area. I think we need to get a breakout. We need to get some clear direction there, because otherwise it's going to be a lot of guessing. And I have a few things to say about this. Yeah, Tom, talking about cruise ships. Oh man, boy, I love a good cruise ship, but I don't know if I want to go on Corona cruise anytime soon. It sounds like cruise ships might be risky places to be hanging out, but I love a good cruise. I do. I'll be honest. So a lot of stocks and certainly in the S&P, the Dow, a lot of these VIX and so on is kind of just in this period, right? We had this big drop and this big pullback, and then we're just stuck. Just stuck. And I think what we need to see here is we need to see some sort of direction happen here. I have very few options trades running right now, and one of them is a bearish spread on SPY. I just put a bearish spread on here, and I said, I'm betting in the next couple of weeks we can get this thing down and certainly into the lower part of this channel. We just announced unemployment. Another 4 million people applied for unemployment. That's pretty intense. 4 million puts us at about 25, 26 million. I don't know what that percentage is, but I think it's a lot. And employment numbers are going to be interesting this coming, first Friday of next month. That's going to be interesting for employment numbers. But anyways, we need to get some direction here. And I just feel like whatever thing makes the most amount of sense is probably not the thing that's going to happen. So we could just see the stock market continue to trickle higher. But there's a very excellent reason for it to obviously move lower. But I won't try to do anything. I mean, I've got my bearish trade on, but I wouldn't try to add or do anything extra, or if you're not in it yet, until we start getting kind of these sub 270s going on here and making a move down. Patty, this is SPY. But VIXY, we're going to talk about the VIX actually and what we can do with the VIXY, because that's another trade that I think I like. But yeah, this is kind of the scenario. Until we get some breaking out of this short-term consolidation, I think we have no real reason to believe too much is going to happen. That's thing number one. Thing number two, anybody familiar with the death cross? Death cross. Bearish spread, short-term or long? Yeah, a bearish spread. I think short term is going to be the key on these trades as well. So yeah, short term stuff for sure, Steve. Yep, good question. So what another thing that we see happening here, and I don't put too much weight in this, by the way, but it is something to look at. This is pretty significant, right? We have the 50 and the 200 moving average crossing each other. And last I checked, I could be wrong about this because, again, I don't look at it a ton, but I think that's the death cross, right? It's called a golden cross when it crosses up, when the 50 crosses above the 200. They call it the death cross or whatever when those two cross to the bearish side, right? The 50 crosses below the 200. So that's something significant. If I take all my opinion out of the market, if I looked at this chart and I didn't know it was the S&P or SPY, and I didn't know what was going on in the economy, and I didn't know anything at all. I just said, look, I don't know what's going on with the news, which honestly I kind of don't. I don't watch it. And I said, you know, I don't know, I have no idea that the virus whole situation happened and so on. I would look at this chart and I would say, well, this sure looks like a chart to me that would do something like this and run up to these long-term moving averages, and you know, we talked about those Fibonacci retracement levels, run up to that 50% Fibonacci level, and then continue down. That's what I would just think if I were just saying this is a chart and I have no opinion other than, you know, what is happening. That's what I would expect to happen. Now, whether that happens or not, I don't know, because a lot of strange things have been happening that don't make a lot of sense, and that's why I think with a little bit of clarity and a little bit of breaking out of this channel, we'll have a pretty good idea of which way things are headed. So I like the short-term bearish SPY trading idea. I think that's a good one. I think our chart tells us it's a good one. I think reality tells us it's a good one. Common sense tells us it's a good one. We'll see. But for those not in it, those kind of waiting and wanting to participate, let's get below 270, 271. Let's just get a little bit of momentum there. Because if this thing starts heading above 285, 286, then that whole death cross means nothing, and we might get that golden cross happening here fairly quickly, and away the market goes, right? Something interesting, we've talked a little bit about past movements, right? And kind of how they work and how they look. I'm gonna revert over here to the actual S&P. So we'll go to SPX here. We've talked about this. We've talked about past, you know, treacherous movements. So our high, our current high, happened to be this guy right here, right? That was all-time high. That was everything high. S&P got to 30, you know, about 3,400, and then it came crashing down. Now we've recovered half of that movement in a matter of a couple of weeks, which is pretty impressive / ridiculous. But here's something to look at. If we look at 2008, now the majority of the movement from 2008 happened in a short amount of time, just like what we saw happen, you know, in the current sell-off. But if we go to the most recent high before the crash, which was this guy right here, this was latter 2007, right? S&P was trading at about 1575-ish, and then it started working its way down, and then we got the big 2008 movement in the latter part of 2008, right? September, so on. So one thing to look at is if you look at this high before the crash, which was that level right there, that was a high of 2007. We did not get back to that high until April 2013. Someone help me with the math there. 6 years, a little less than 6 years, 5.5 years to get back to that high prior to the crash of 2008. 6 years. That's pretty intense. Now, a lot of things are changing. I get that. I can hear thoughts and so on. So yes, things are changing, but it doesn't change the fact that that's what happened. If I extend this line, the 2007 high was actually just taking out the high prior to the dot-com bust, right? So here's our high of March 2000, right, in 2000. There's our high. Again, S&P sitting at 15, you know, in the 1550s, and it dips down in March 2000. To get back to that high, it takes us all the way to July of 2007. 7 years to get back to that high. 2008 crash, 5.5 years to get back to the high. Even if we go back, let's look at 1987. How's 1987 looking? So 1987, the big crash here, very similar structure, you know, 3 weeks of intense selling, little double bottom, nice little movement, and so on. Look at this high right here. So the high of 1987 happened right here, August 1987, and then the crash was, you know, October 1987, so not too much later. And the high of that crash was only just a few points below, 10 points below the absolute high there. So if we look at that absolute high of August 1987, to get back to that high, took us all the way to July of 1989. So quicker, it was quicker. That took just a hair less than 2 years. So if that means anything to us as traders, and it may or may not, right? Everything's changing and markets are going crazy and a lot of things are different, all of that good stuff. We have made a very swift recovery here. Oops, there we go. Quite an incredible recovery. It's happened much more quickly than any other ones we've seen in the past. But still the shortest time we saw from previous highs to reaching those highs again was just about 2 years. Now I mean, you know, we could say that about mid-February is when this whole, you know, dipping started. The real intense selling started kind of end of February, but mid-February we'll say was the high. Could that put us out to, say, 2022? What do you guys think? And actually, I'm very curious what you guys think. I haven't really discussed this with anybody. It's just my own thoughts, my own things I'm looking at. Putting that into context there, what do you guys think? Are we going to get back to these highs quickly? If so, why do you think so? Or are we going to take a long time to get back to the highs because the markets, well, that's just how they operate? What do you guys think? What are everyone's thoughts on that? I think there is something to look at there. And the thing is if this takes us a long time to get back to those highs, there are going to be plenty of opportunities to buy these dips. And that's what I want to do. And that's kind of the moral of the whole story here. It is this kind of thing, and 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 maybe that kind of thing, and that kind of thing, and so on, right? You know, maybe we get a big bullish head and shoulders pattern. Maybe we get all kinds of different things, but I think there's a lot of room for negotiation here that's not just going to allow this market to recover no problem, right? Steve, you say in a few years at best. Okay, good point. Patty, I think it's going to rebound quickly. Hey, Patty, I'd love to hear why. Tell me a little bit more about that. Scott, does it matter during an election year? I think it does matter. You know, the elections are a while off still, but that could slow things, right? Especially if we got a change in administration, right? If we don't get, you know, if we get a new president, a new administration, I think that could really slow things down. I think that could really, really slow things down and really make this a much slower recovery. So that's, you know, that would be a factor, I think, to really consider. You know, political beliefs aside, I think generally speaking, Wall Street loves Trump, right? So I think Trump staying in office could speed up the recovery of the stock market exponentially. Trump leaving office, I think, could slow things down a lot because, you know, the unknown, the uncertain, the less market-friendly administrations and so on. I think it's interesting. So there's something to think about, but it's a good point, Scott. It's a good point to bring up. Tom, we have a long way down before we go much higher. I think that's very possible. Others were based on bubbles. This is something new. Any news that opens up the economy in a significant way will cause a big rally. It's a good point, Lenny. It's a good point. Sure. Mary, I believe will take a long time. Current data suggests actually more than 10 million cases. Okay. Vaccines, problems. Okay. Yep. Good point, Mary. Right. Okay. We'll crash the market if we get a new president. Possible. Okay, Patty, I think once the fear has subsided, new president will determine or will be detriment to the country. Okay. Okay, first half election years are weak. Gotcha. Market usually comes back after election is over, no matter who wins. And that's a good point, Lenny, right? Markets hate uncertainty, and so at least knowing who is in office takes that question mark out of the way for sure. Mel, we might survive. That's a good point. Yeah, Martha, that's true. Yep, unemployment has definitely just killed It's killed all the jobs that have been created in the last decade plus. So, yep, it's a good point. I think slower could be possible. Crystal ball is broken. Yeah, that's the truth. That's the truth. That's my favorite comment too. I get asked a lot, where's the market going? I always say, I don't know. I don't know. But I think there's things we can look at. There's information we can take in to kind of help us to plan for what is coming. Now, one thing is certain, right? That in just any kind of market, generally speaking, it's pretty uncommon to just get this kind of movement and that kind of movement, right? We've talked about V bottoms and how they do happen, but it's not the most common thing. Not the most common thing. And a situation based on nothing, yeah, that can happen, right? End of 2018, V bottom. That was based literally on nothing, right? Everybody sold out, took their profits. There was no buyers. The market sank. And then everyone bought again on the dip, and it just recovered like crazy. So that was a different situation. This was more like the 1987. There was really no reason other than buyers were just not interested in buying. The economy was as strong as ever and going great. And so, little less than 20% sell-off, big correction, everything was awesome. This is certainly much more on a grand scale. Now, I think, Lenny, to kind of go back to your comment of this is new, things based on bubbles versus something new. Yes, I think that news will help the market rally, right? There's a vaccine, economy's opening up, and we're going to see rallies come out of that. But at some point, there's going to have to be some sort of reckoning of the fact that there are tens of millions of people unemployed all of a sudden. And those people aren't going to become re-employed immediately, right? So we're going to have this massive unemployment rate that is going to have to cause some dips. Even if we start a nice solid uptrend here and it goes like that, we want to be looking for those dips, right? We want to be looking for those dips. Right now, this is a pure up market, and we don't want to try to do too much with that other than what I mentioned earlier, which is find that short-term channel and look for some short-term trades on that breakout, right? Find this area, find these consolidation zones here, and be ready to kind of trade those breaks. And otherwise, we're kind of in limbo. I'm not Catholic, but they call this purgatory or something. No, what's the waiting room? Somebody calls it something. We're in pure limbo territory is what I'm trying to say. So we've got to get this thing breaking up, breaking down, giving us some sort of direction to work with. Where I think there's going to be some interesting opportunities. Questions, comments, guys? Everyone feel okay about that? Thanks for your comments. Good stuff. Good stuff. Dom doing the limbo in purgatory. I like that. I think that's good. But good comments, everybody. Good comments. Oops, there we go. So where I think things are still interesting. I'm still looking. I like the airline stocks. I think any kind of news is going to be very positive for the airlines, right? Travel is unrestricted, that kind of stuff. And so I'm interested in these airline stocks. I think it's quite a good opportunity here to be looking for these. But I still think we need something here to give us a little bit of light at the end of this tunnel. This is quite an aggressive, once again, if we believe in this. I don't know how much I believe in it, but if you look back at charts, it's pretty significant. There's a pretty significant bearish cross here, right? And so that being the case, again, what our charts would kind of tell us is some of this and potentially some of that, right? And so I'm just kind of watching these airline stocks. As I mentioned, I like them. I think there's good opportunity there. But I think these airline stocks are going to struggle for a while. And I think that's okay because these are going to be great stocks to just buy. Chances are once the airlines are kind of opened up again, so to speak, they're going to have to run at, 25, maybe 50% capacity as far as full planes, right? Nobody can sit next to somebody else which, by the way, thank heavens. Nothing like sitting on an airplane and being crunched up next to somebody that forgot to shower this year. So I fully support that. But that's going to be hard for the airline industry, right? Where, running these planes at half capacity or a third capacity, it's not going to be good for business. But again, they have Uncle Sam's checkbook, and he's basically said, we got you covered, so that's all right. But I'm definitely interested, can we get dips? How is this going to, behave once we retest some of these real aggressively bearish moving averages? What's going to happen there? So I'm still kind of holding the fort on airline stocks. I think there's some decent, short-term bearish credit or bullish credit spread trades that I think we could probably take now, and just looking for, that little recovery back up towards the moving averages, get delta up from, the low 20s to the mid to upper 20s. Yeah, I think that's pretty doable. But I think there's probably a little bit more pain to come first. Mel, I think you're right. They probably will raise prices. I have a Costa Rica trip planned that might get unplanned for August. And so I set an alert for buying my tickets. I figured it's several months out. I'll just figure out, when prices are pretty good, I'll buy them then. Prices are going up. Costa Rica tickets are like more expensive than I've ever seen them. And I'm going, I missed something here? I guess, it's kind of like flying private. If I'm the only one on the plane, then I guess, paying an extra couple $100 is all right. But it's definitely hard times. Yeah, right. Current conditions might give Boeing a chance to fix their problems. Boeing is so up to their eyeballs, and only because they have government contracts and defense contracts and basically a blank check as well from the government, are they even surviving? Boeing is just full of some of the biggest boneheads ever. And so the stock, though, seems to be, it's rebounded quite a bit, right? We had some pretty intense lows here on Boeing, all the way down to the 80s, and then it bounced all the way back up to 185. I mean, give me a break. What a massive move. And it's kind of settled in here and stabilized in the 130s. I like Boeing as far as just, can we get some real big extra dips on this thing? Can we get this really back down to some of these real intense levels? I think $80. Could we get back down to the low 80s, high 70s? I feel pretty darn interested in getting in on some Boeing then, for sure. So yes, I think that is always a good point. Steve, Boeing may merge with another. Yeah, it could. I think Boeing and like Volkswagen need to merge. They're all good at covering up crazy things. Volkswagen and their diesel engine, shenanigans, and Boeing and their we forgot to put our planes together right. I think great gas mileage. I think that would be a good thing. I wonder if they can make a diesel engine for an airplane. It might be the way to go. Martha, cruise lines are booking for 2021. They must be counting on a vaccine. Yeah, that's true. That's true. Yeah, that 737 MAX situation, that was a big problem. Big problem. So, solar plane might be a little bit of a risk, for sure. I'd maybe steer clear. Probably be, especially if you got a red eye, that'd be a real problem. Yeah, exactly. Thunderstorms, no good. Here's another thing that I think might be interesting to trade. So, again, I'm pretty interested in being, short-term bearish S&P. Ultimately, I want to get bearish the VIX, and we could do that through buying puts on VIXy, or there's another inverse. Is it? No, I don't think that. Oh, that one's crazy looking. I got to think of the inverse VIX. No. Which? Someone help me out here. Which one is this one? what is the darn inverse? Well, I'll find it. But anyways, I think getting some bearish trades on the VIX through the VIXY or other forms is a great thing to do, a really, really good thing to do. But if we get a little bit of a dip in the stock market and there's a little bit of panic getting there, like we get some bad news, we get this VIXY up in the upper 40s again, I think whether you just have to, plain short the shares or buy a put or something, that's one I believe in. And that's one that I think is going to be a great trade. So on spikes, I want to short the VIX. I'm bearish S&P at least for the short term. Not taking a ton of risk because, again, I don't really trust this market too much. Thank you, Lenny. There we go. SVXY. So there we are. So here's something that we could that we could buy in on, right? Let's let the VIX spike up a little bit more. Let's let that happen, and then let's start looking for opportunities to get bearish the VIX through either an inverse ETF like this SVXY, and this would be something I would buy shares in more because it's probably going to take a long time. This is probably going to be a long run, but I feel like it's a semi-guaranteed run, right? Volatility will come down. If it goes up again, and to be clear, I don't want to do anything until volatility goes back up, and then I feel very excellent and very excited about shorting the VIX through an ETF or some of the others. So that SPXY is good, and there's always going to be a couple of them, but any kind of movement like this should give us a great trade like that. And remember, guys, there are also, for those, just hankering to get some stocks and options and some ETFs and so on, I'm kind of liking the ETF situation. I trade currencies a lot as well, as you guys know, and I love the currency side of things, and I think there's some long-term trends in currencies coming. So some of those ETFs for currencies, this is this is a currency ETF, USDU. That's just bullish US dollar. I'm actually, for the short term, I'm bearish US dollar. So you could buy shares in this UDN. You can buy shares in this, and if the US dollar weakens, which I think there's a decent chance of that happening, you can own shares in UDN and do pretty well, I think, as long as the dollar does weaken, and I think it will. The dollar's been quite bullish for quite some time. So here's kind of this long-term chart taking us all the way back to 2007 here. So as this chart goes down, remember that's the dollar strengthening. That's dollar strengthening. So as this chart goes up, that's going to be some dollar weakness, and I'm ready for that. Bring on the dollar weakness. Let's get this thing going. So UDN is a U.S. dollar ETF, and I think that this is a good one to start looking at some options, not options necessarily, but some ideas for getting bullish here. I'm pretty interested here. I think if oil starts to recover a lot, here's another one. This is a Canadian dollar, and these guys move a bit with oil. So I would honestly rather trade the Canadian dollar on an oil recovery than I would trade the just an actual oil ETF like USO. I'd rather be bullish the Canadian dollar, and so you can do that with FXC. FXC, that's the Canadian dollar. That's a pretty heavily tied to commodities currency, and if oil makes a big recovery, typically we'll see some Canadian dollar strength. But I think the Canadian dollar, I think the commodity currencies are looking pretty interesting. And when we look at the long-term chart here, that's a pretty convincing double bottom, if you ask me. And technically, nobody did ask me, but I'm telling you anyway. So big double bottom here. I think that's pretty significant. That's taking us back to some of these, 10 and 12 and 13-year lows. So I think bullish FXC looks pretty interesting to me. Do we have any Australians in here? Any Australian folk? I think Mary's in Australia. Are you still with us, Mary? Mhm. Any other Australians? Any other Aussies in here? I think she might be the only one. Um, okay, still there. So I think the Australian dollar has massive opportunity as well. So FXA is an Australian dollar ETF that I think could be a great opportunity and a great possibility. Again, going back 10 years or so, pretty aggressive double bottoms here. I think it's time for some of these charts to really just rock and roll. The commodity, as terrible as the commodity market seems, these commodity currencies are just ripping. They're just doing great. And oil is actually the only commodity that's cheaper. Every other thing is going up. So that's why a lot of these commodity currencies um, are really doing great. And so I think there's some good opportunity there. And just while we're on the commodity situation, FXC, FXA, UDN, I would just be trading those three bullish. Copper's making its run back. I need to find a copper ETF. I'll have to look that one up. But copper's doing a little bit. Copper is, remind me what the symbol for copper is. I haven't looked at it in a while. I know there's like a copper. Well, we can always just type it in here. XCU. That's the one I was looking for. And then we've got a lot of copper futures and so on. But if we just look at copper, spot prices here, down. It's down a hair, but it's been on the recovery for a couple of weeks. So it took a big hit with everything else, but definitely making its way back. Peggy, yes, that's right. We asked by showing up. Great. So yes, guys, FXA, FXC, UDN, these are all good ones. And gold, right? If we look at the gold spot market, this thing is up like crazy. Now, why it's up, who knows, who cares? It's up because commodities are going crazy, and this is a great hedge against feeling very unstable about the market. And it's also, as we've talked about, a great, excellent, fantastic way to find one of the most bullish patterns I've ever seen ever. So you can go to GLD, same kind of thing, right? Big run higher here, and then we get this big, massive rounding bottom pattern. And that's significant. So there's a lot of resistance to get through. Make no mistake about that. That's not going to be smooth sailing getting through some of those levels, but I think this is the run that gold makes it, gold prices, spot gold makes it into 2,000, 2,500, into that area, that it takes out all-time highs. And I think GLD could very well take out these all-time highs as well. So I like gold. This is a super bearish chart. If we create a nice little cup and handle over here, I think that's a great pattern, right? Get a little pullback at some of those resistance levels. Boom, boom, away we go. So those are the things I'm looking at. The rest of, as I said, the rest of the stocks and so on, I'm just not, I'm watching banking stocks. I'm liking those. I'm watching airline stocks. I'm liking those. But, I just feel like the market's got to make a little bit of a decision. Now, there's going to be little opportunities for short-term pops, right? Airline stocks, travel is opening up. Airline stocks will pop. Can they hold it? I don't know. People start miraculously paying their mortgages again. Maybe banking stocks will pop a little bit, right? But it's, we're still in this kind of situation where things are in a little bit of a pullback, on the banking stocks in particular. This is something we talked about, last week, right? We said, okay, here we go. We're back down to this, very technical bearish flag here. We expect a breakout. We expect a retest. I'm looking for Bank of America to go below 20 for sure. I think JP Morgan might be headed down into, below 80, maybe just below 80, maybe 280, but I think there's going to be some good dips there. So I'm watching those, but I think some of these commodities are going to be good to trade. I think if the U.S. dollar weakens, That's going to give a big rise in gold. That could very much help oil. That could help a lot of the commodities. So UDN on the dollar bearish trade, UDN, FXA and FXC for the Australian dollar and the Canadian dollar. And I think those are going to be good opportunities to get bullish on. And then I'm just waiting for the stock market to give me something good. Give me something to believe in or something, right? That kind of sound like something right there. Anyway, that's what we're looking for, guys. That's all I have for y'all. What do you guys think? Questions, comments? Was that helpful? Did anybody learn anything? Does anybody feel like that was some good information, bad information? Did I leave anything out? What do you guys think? How's everyone feel about that? Thanks, Lenny. Nice to have you. Yeah, thank you, Steve. Thanks, Peggy. Thank you. Good. Yep. Lots of things to look at. Yeah, thanks, Mel and Dom. Good. Glad to have you guys. Anybody have any questions? Anything I need to answer? Andy, thank you. Nice to see you. Good, Mary. Lots to think about. Okay. Yeah, I think the dollar's going to be interesting. I think the dollar's going to be really super interesting, and there's going to be some opportunities there. Who's going to win the next horse race? Yes, boy, I wish I knew. Thanks, Janae. Good to see you. Yeah, and Dom, I do like those tech sectors. Those seem to be doing very well. XLK, SMH, those are good ones. They're still, they seem pretty high from the recovery. Those are big V bottoms, and yeah, I like pullbacks on those for sure. Good question, Mel. Will there be another horse race? That's the question. Will there be another horse race? Yeah, boy, what a good question. I have no idea. Good, guys. Excelente. All right, you guys, get on with your Thursday evening. Thanks for spending a little bit of time with me. It was a pleasure to see you all and chat with you all. And thanks for your input and your thoughts. And have a great evening, guys. I'll get this recording posted, and we'll see what this market ends up doing for us. Thank you, Martha. Good to see you. Thanks, Scott. Good to see you, my friend. Thanks, Peggy. Thanks, everyone. Happy trading. We'll catch you guys all on the flip side. Thanks, everybody. Take care.